Hey all, welcome to ShareTreck. This is your host Raj. And friends, today I want to talk to you about my thoughts around Caribou Biosciences post their 2023 earnings. I'm sorry for the delay in bringing this to you. I have been very busy trying to improve the content creation and managing the elevated state of our contents. You realize that we now have subtitles in both, in multiple languages in both the channels, genomic channels as well as the HIV focused channel. Apparently, it takes a lot of time, and you'll also notice that I've managed to hide the mic, so this is much more natural. So I'm working on things. I have to watch some YouTube videos to learn all these tricks. So it takes a little bit of time, and then of course I have to study the topics before I can make a video. So that said, all excuses apart, let us save time and get started. Well, friends, when I look at all the therapies in the pipeline and the state of that progress, I have no doubt that the pipeline activities have got nothing to do with the fall in the share price of Caribou after the earnings release. The reason being that we have had good news. We are now starting to talk about pivotal studies. Typically, pivotal studies happen very close to BLS or monetization of a therapy. So that is good news. They are working towards that. And also, there has been no setback in any of these pipeline items. The times when I would be worried about a company and where I would expect the share price to drop post earnings is if in the earnings, in the pipeline section, if they mention that they are dropping some therapy or that any of the technologies that they have been developing has now got to be stopped, or the FDA has put a hold. Those are all the instances where I would say that some item in the pipeline can influence a severe drop in the share price post earnings. None of that happened here. So the pipeline looks healthy. The outlook looks great. So overall, I'm happy with this. So having said that, the next thing I want to do is to look at the financials and see if there is any bad news buried in there, which could have caused the 30% drop in the share price post earnings. So let's go to the synopsis of their financial statement. Well, let's look at the cash and cash equivalents first. Caribou's cash position increased to 372.4 million for Q4 2023. And when you compare that to their cash position on 31st December 2022, which was 317 million, we see an increase out here. This increase was primarily fueled by net proceeds from a public offering and an equity investment from Pfizer. Now, the equity investment from Pfizer happened earlier and it came in the news and it had its catalyst effect on the share price. It's all priced into the share. It was all priced into the share when we had the earnings come out. So it had nothing to do with the post earnings share price movement. And then the company is expecting that this cash balance is going to help them fund their operations with all their existing plans at the same rate of progression all the way up to Q1 2026. This indicates a strong financial stability, and I don't think cash and cash equivalents was a reason for the share price drop. Then looking at licensing and collaborations revenue, I would say that there was a slight decrease in revenue for Q4 2023 compared to the same period in 2022, but the full year revenue saw an increase primarily due to revenue recognized from a terminated collaboration agreement with AbbVie. And even though this is a negative aspect that big pharma giant like AbbVie terminated their collaboration agreement, but the positive thing is that the cash balance went up. And another item you have to remember is that AbbVie breaking this collaboration happened way before the earnings, and it was already priced into the share even before the earnings came out. So that is not the reason why share price dropped post earnings. That said, let's go and look at the research and development expenses, which came in at 31.3 million for 2023. I would say that the R&D expenses increased both in Q4 2023 and also for the entire year of 2023 as compared to 2022. And this increase is attributed to advancing pipeline programs, personnel related expenses, and other allocated expenses. And while R&D expenses is necessary for innovation, especially for a company like Caribou Biosciences and most of our genomic companies, they're all in their quest for monetizing one of their therapies and getting profitable. and in this stage, cash burn in R&D expenses is not unusual. The only thing I'll be watching out for is that it is burnt properly and all the therapies are proceeding in pace as per the announced plan. I do not see any announcement of delays by Caribou Biosciences. All their therapies are providing on schedule. I have not heard in this earnings release that Caribou is dropping any of their therapies or technology research. So there is nothing negative, in my opinion, in this marginal increase in research and development expenses. In fact, I think that it's a good thing that they are investing in R&D in order to progress the therapies. And then I would next look at general and administrative expenses, which increased slightly for both Q4 2023 and also for the full year compared to the same period in 2022. And this increase was primarily due to personnel related expenses and other allocated expenses. However, some expenses were controlled and reduced in certain categories in order to keep this in check. So that once again demonstrates, as Caribou has done in the past earnings as well, that Caribou Biosciences has a good hold on its expenses. They run a tight ship. So I don't think G&A expenses or R&D expenses are a cause for the share price to fall post earnings. Next, we look at net loss. Caribou reported a net loss of for both Q4 2023 as well as for the full year. And the net loss increased for not only the quarter but for the whole year as compared to the same period in 2022. And this is basically because of increased investment in R&D expenses and operational activities, which I explained to you I'm not too much concerned about. And overall, based on the financial data, Caribou appears to be progressing well with a strong cash position, revenue growth, and continued investment in research and development. However, as with any biotechnology company, success ultimately depends on the successful development and commercialization of its pipeline products. And at this in this earnings release, I have not seen anything that would indicate to me that they have fallen behind in that progress. So I think that based on the financials and based on the progress of candidates in the pipeline, I don't think there's any reason for the share price to drop. So my conclusion, of course, this is not financial advice, this is my personal conclusion. I believe that the share price drop is an overreaction, it's a knee-jerk reaction, and the share prices should bounce back again. And I will take you to the price chart to have a quick look at the price chart before we end this video. So if we look at this price chart here, all the candles are one-day candle out here. And you have seen that there had been an attempt for recovery today as well, and we ended up within yesterday's range. So this basically indicates to me that despite the fact that bears are trying to push it down, the stock price has some resilience, and we have been in a better position for every subsequent day since the initial fall. So I think overall there should be a bounce back. We have a resistance out here at 6.27. I'll expect Caribou Biosciences to take care of that by next week. So that's my expectation. One of the things that happens to many people is they look at the earnings and they say, oh, the company did not meet EPS. It fell short by 6.11%. It did not meet earnings, revenue. And it fell short on revenue by 10.23% from analyst expectations. And let's sell the stock. I don't think of it that way. What I believe is that for a company like Caribou Biosciences or Editas or anything, the revenue can be wildly off the mark, and that can in turn impact the earnings. So I think that's something that could have happened. Many people would have seen the miss on both EPS as well as revenue and decided to dump the stock. And as they start realizing, oh, that's not the case, things will start improving and will cross this resistance at 6.27 next week. Right now, the momentum has improved since the earnings dump, but it needs to improve a lot more. That's what I would say here. You look at a company like, for example, Apple, or you look at a company like Ford Motor Company, you would be able to rely on the analyst estimates because the analysts have got a really good hold on all the numbers, and they have models that have been tested from past earnings for over decades. and they know exactly what is happening. For example, if there is news that there is a new sanction in China or something, and the market is not going to work for iPhones, immediately the analysts will know what is the quantum of impact on the earnings and the revenue, and their estimates will be bang on. But with a company like Caribou Biosciences, where there is no track record of earnings, and all the milestones that they deliver on is something that generally we don't get an idea of what is happening and when such monies are going to come. So some quarters they have phenomenal earnings and they knock out the EPS out of the park, and the rest of the quarters they're all negative, negative, negative. So friends, just to conclude, I would say that it's my personal opinion that the share price drop is probably a buying opportunity. Of course, this is not financial advice, so please do your own due diligence before buying this share. Thanks and have a great day. Bye for now. Catch up with you in the next video. See you later.